Welcome to another edition of The Savant Investor. Please support us by subscribing. Home price gained strength as coronavirus shut down the economy. Home price was still gaining steam as the country began to open up in the face of the pandemic. On a national level, price rose 4.4% annually. New home sales rose nearly 1% in April instead of an expectation of a huge 22% drop as prices fall. The median price of a newly built home dropped 8.5% annually to $309,000. March data witnessed the first impact of the pandemic on the S&P Dow Jones indices. Housing prices continue to be remarkably stable. The same cities continue to lead the gain, with Phoenix, Seattle, and Charlotte seeing the highest year-over-year gains among the 19 cities. Prices in Phoenix rose 8.2% annually, followed by Seattle with a 6.9% increase and Charlotte with a 5.8% increase. Price gains were smallest in Chicago, New York, and Dallas. Prices are still being buoyed by the severe lack of homes for sale. There was already a shortage going into the coronavirus crisis, but then sellers began delisting their properties and potential sellers decided to wait. Total for sale inventory at the end of March was down 10.2% compared with March 2019. Even now, as the demand is coming back more strongly than expected, new listings are down 28% from a year ago. The strength in price came even as mortgage rates bumped up sharply higher earlier during the month, which should have given home buyers less purchasing power. Rates began falling quickly after that and hit a new record low in late May. As states are cautiously reopening business and people are looking at summer plan in a new light, the reality of 25 million unemployed Americans is casting looming clouds over the horizon. For home buyers, low availability coupled with still rising prices are overshadowing the benefit of historically low mortgage rates. Housing prices has not yet registered any adverse effects from the government's suspension of economic activity in response to the pandemic, as much of the U.S. economy remained shuttered in April. Builders have been reporting stronger demand lately, and sentiment popped back in May after falling sharply in April. Mortgage applications to purchase a home has also been rising steadily for more than a month. Potential urban flight. While sales were still 6% lower in April compared with 2019, it seems like the market for new homes may be faring better than the market for existing homes, and there are several reasons for that. 1. First and foremost, there is a much larger supply of newly built homes available, a 6.3-month supply at the end of April. That compares to a 4.2-month supply of existing homes for sale. 2. It was also much easier to show a newly built home in April than an existing home. Buyers could walk through new models or look at various online plans, while most existing home sellers moved to virtual touring only, not wanting strangers in their homes due to the fear of the virus spreading. 3. Buyers who have been stuck at home in quarantine may also be looking to flee the confined space of the city. A return to bull market in stocks and a return to economic growth are depending in large part upon the containment of the virus, which will allow business to reopen and consumers to resume their spending habits. The market seems to be pricing in a quick economic recovery, a V shape, which will explain why the recent rally on Wall Street. When people feel rich because of the portfolio has risen, people tend to pay higher for housing.